Yeah, if you check through the Nigerian Stock Exchange, you find that the entire portfolio of exchange-traded funds on our market is just a notch over about 6 billion naira. So it's a very relatively small market that sometimes some folks on the street are not even aware that they exist. An exchange-traded funds give you, it's just an index that is put together behind some underlying assets. So that's just a brief explanation or what introduction, as it were, to exchange-traded funds. But let's get a bit more of that today as the Stock Exchange holds the 2018 edition of this conference with faculties from within and outside the country. We're talking to the head of research at Afrinvest. Robert Omotunde is live to us from our studios downtown at the Nigerian Stock Exchange. Robert, it's good to see you and welcome to the program.
Thank you, Rosin.
Yeah, very quickly, give us ETF 1.0.
So of course, you know that the Nigerian Stock Exchange, the Nigerian Stock Exchange is hosting a conference today where they seek to sort of inform the market, educate the market about the exchange traded funds generally. It's been here for some time. The first listed instrument was launched in 2012. That was when the New Gold ETF was launched in the market, and of course, after then, we've seen a host of other instruments that have been introduced at the Nigerian Stock Exchange, usually by various market participants. And most of these instruments have been tracking, of course, various equities. So what the NSE is doing today is more or less trying to solidify that segment of the market, which is still barely weak. You mentioned it in your introductory highlight. As we speak, we have only 6.1 billion naira of market capitalization for all ETFs listed across both equities and the commodities that are listed currently. If you compare that to the current market cap at 11.3 trillion, that's barely 0.1% of market cap. But when you do the same for the US market, for example, the US market has almost 1,500 ETFs listed, tracking various commodities, equities, and indices, some of them multi-factor in nature. And when you compare to just the market capitalization of S&P 500, for example, you're seeing a ratio of 12.5% or thereabout. So we are still barely scratching the surface in terms of what we need to do, to deepen that segment of the market. So
okay, so what do we need to do? What do we need to do Robert? What do we need to do? There are some of you who have a few ETF on the market. What does it take to put together an ETF? Basically, it's a managed funds, really. Whether you want to put it behind crude oil, or it's going to be gold-based or metals, or it's going to be soft commodities, or it's going to be on currency. Some folks are talking about a Bitcoin or cryptocurrency ETF, even though the US SEC is still saying no, shut the door against anyone who wants to do an ETF market. So what does it take really to put an ETF together? How attractive will it be in our own market here?
We have to put it into perspective. Well, ETFs are like managed funds, but they are slightly different from mutual funds. The difference here is that they are exchange traded. That is, they can be traded on the floor of the Nigerian Stock Exchange, as in this case. And the bits that have been done, we're talking about it today. That so much still needs to be done, but from what has been done so far, what we know is that we have about 9 major instruments, within that segment at this time. That is not sufficient. It's just still barely scratching the surface. Market participants are already creating products, but if I put it in context, what we've seen so far in the market, with the exception of 1 or 2 instruments that have been that have sort of taken a departure from the tracking of the so-called benchmark indices that we have in the market now. We see most of the ETFs that we have tracking major NSE indices. So what some market participants are already trying to do is trying to create ingenious products around this. So indices already are being formed For instance, some people are in talks with the NSC, trying to see how to, launch an index that would essentially be tracked by some ETFs, that can also be traded on the floor of the exchange. So there's a lot to be done, and market participants, for instance, AfroInvest is definitely talking to the NSC on how we see how to launch a product around that segment of the market.
So I've always been looking forward to ETFs or ETPs that are tied to listed securities, perhaps the big names in the consumer goods, the banking, in industrials, in the oil and gas. Is that what will likely happen? Is that what we're going to see moving forward?
Well, we already see, within the host of indices that are being provided by the NSC as we speak, some ETFs are already tracking some of those indices. For example, the NSC 30 is being tracked by the Vetiver Griffin 30 ETF. Stanbic also has a product around that, tracking the ETF. The NSC 30. The consumer goods index also, that of the NSC, is also being tracked by another product that was launched by Vetiver. But again, what we are seeing now is that after tracking all of these indices that are already sort of statutory, that are provided by the exchange, what more do we need to do? And that's what some of us are trying to do, trying to create value around the listed equities, listed securities, and creating indices that can actually return value to the investors. Again, what we're trying to do here is that it reduces the lot of work that investors need to do. They don't need to bother themselves about how they manage their equity portfolio. You can just buy into an ETF, and indeed is the future of investment management business across the globe. I just mentioned that S&P 500 market capitalization, you have up to 12% of listed ETFs that make up to 12% of S&P market cap. By the time we are getting closer to that level, then we are really starting. But again, we know that that's the future, and that's the way to go. For it's another way of deepening the market. When you look at the amount of securities that we have currently listed, markets still suffers that depth and breadth. Again, ETFs will provide another avenue for investors to actually deploy their funds, especially now that the equities market
yes,
is,
Robert, that's exactly
again,
that's what I'm latching on,
level that it should be trading.
That's what I'm latching on. Who are these investors really? Are PFAs allowed to get into ETFs, insurance companies? Who are the big boys here playing the ETF market, and who is allowed? Retail investors?
Well, of course, retail investors can buy into ETFs as well. It's just like buying into any security on the exchange. The only difference here is that when you buy an ETF, you are buying a portfolio of securities. So a unit of an ETF that is in your portfolio mirrors a portfolio of other securities that the ETF is tracking. You understand? So what we're saying here is that, of course, in terms of those who are participating, the PFAs are the big boys in town, like you mentioned. Of course, they are in this space. But retail investors are also not excluded. For a number of securities that are available, you can also buy them just as you buy any other security. For instance, the way you buy your GT or you buy your Dangote Cement security, you can also buy an ETF, in that similar manner. So there's really no major hurdle created, only that it gives you an advantage to buy into a portfolio. Think about it. If any security declines in value, you see the effect in your portfolio. But for an ETF, for example, because it's tracking a number of portfolios, even if that ETF is tracking a particular sector, the likelihood is that if you have 5 instruments in your portfolio, for example, there are 2 securities that are down and 3 that are up. The ETF can be positive at the end of the trading that day, depending on how weighty each of those securities are on the basket. So it's not really different from what you buy when you buy a normal equity security.